Hi, welcome. My name is George Dagnino. I'm the editor of the Peter Dack Portfolio Strategy and Management. Momentum is a very important factor of investing. The reason is that once economic forces, as in, are going, your strategy is set. So if the economy strengthens, you want to go with cyclical stocks, industrial, financials, uh, machinery, commodity kind of stocks. However, if the economy, and then this trend lasts for maybe 1 to 2 years, sometimes 3 years. Then if the economy weakens, then you go defensive, staples, utilities, healthcare, and that is also a trend that lasts for several years, with the cycle roughly 4 years from bottom to bottom. So people tend to like the trend, they're making money, and they sort of stop thinking. That's my point. And as you can see now, the famous analysts and retired chief economists, strategists of big hedge funds, they're seeing, including myself, by the way, I'm a little guy, but still, I think like they do. Um they say, well, the economy started slowing down in 2021. So I got to be defensive. And then you're beginning to see the yield curve inverting. And then you start seeing the Fed raising interest rates. And then you start seeing bank failures. And then you see credit risk rising. And then you see reports that bank lending officers are tightening lending standards. So all these negative things, they'll say, gee, I'm right. The economy is slowing down. And you sort of rest on this idea, you are happy because you've been right. And this is what I call linear thinking. That at this point, still people are forecasting a disaster. Either it's always the second quarter, then it becomes the fourth quarter, then becomes that they're delaying the recession and the Armageddon. It's going to happen. It's going to happen. The question is when. And this is where linear thinking, I talk about linear thinking. People don't recognize that there is a turning point. So the purpose of this video is to show you that there has been a turning point, and including myself, I'm still predicting a disaster coming because of all the Federal Reserve and so on. But people only look at the Federal Reserve. There is also the government that is spending a ton of money. And the two forces are clashing, which I think the government is winning. So let me show you what I mean in the following charts. This chart is shows a proprietary indicator, and it's computed daily, and it shows the business cycles. These are times when the economy strengthens. This is a time that the economy weakens. It started strengthening in 2020. It started weakening in 2021. But look what is happening now. Now, why is this important? Because during these times, as I said before, cyclicals are strong. During such times, the defensive sectors are strong. The same thing has happened here, and the same thing has happened until October 2022. But from October 2022, there's been a different market. Something has changed. And what the linear thinking was suggesting is, I don't believe this. I believe that this is really the trend. Instead, something has happened here. And this is what I want to show you, which I think is very, very important to recognize a turning point. Is it real? Is it fake? It doesn't matter. Something is happening different. The first thing that has happened since October is that beginning in October, these are real average hourly earnings after inflation. They've been going up. Remember, this is when the stock market bottomed. They're going up, and right now are in positive territory, meaning that now people are making money after inflation. But something else is happening that I think is very important. Real income and real spending, that is income and spending after inflation, is up on a year-over-year basis after inflation. Where is all this money coming from with the Fed tightening and all that? So something is going on, which is, it looks like there is a new business cycle, a new expansion, because people are making, it's totally different from what happened here. But look what's happening here. This is very, very important. People in the factories are making more money after inflation. People are making more money after inflation overall, and they're spending more. So this is, I know there are the negative things, credit cards and all that, but you see, that's linear thinking. There is something positive happening, and that's where I want to stop. And what about truck sales? Trucks are very expensive business equipment. Look what's going on. They're soaring. Look what happens in the previous cycles. The reason I follow them, because they show the cycle exactly as I showed you in the first slide. And here looks what they're going up. So what heavy truck sales are saying, business is buying heavy trucks because they see business that justifies that purchase. Not only that, but as I said, this is the beginning of a cycle. This is a beginning of a cycle. This is a beginning of a cycle. This smells like the beginning of another cycle. And again, linear thinking says, the housing market is bad, the auto sales are bad, you see all these bad stories. But the truth of the matter is, look what happened since October of last year, from October of last year. People are making more money, people are spending more money, and people are buying new houses and new cars. I understand all the negatives of the linear thinkers, but it smells more and more like a turning point. And this is the Chicago Business Barometer. Look how it follows very neatly the business cycles that I showed you in the first chart, and then in auto, the heavy truck sales. Look what is happening in manufacturing. This is a strictly manufacturing indicator. It's turning. It shows improvement. What to think? Things are supposed to be Armageddon in the second half, but instead things are turning. So what is an investor to do? And as people are waiting for Armageddon and a sharp contraction and recession and depression and deflation, the market has been going up since October of last year. And although it's still at the same levels of 2 years ago, so it's not that, it has been a booming period the last 2 or 3 years. So, but it is a fact that since October of last year, the market is up 26+%. And the another indicator that shows a strong momentum is above the 200-day moving average. This is an important indicator that I compute in every issue at the end of the month, and is outperforming by 50% the buy and hold strategy fuel held by since 2000. So this is just saying, hey man, momentum is strong. These are the 11 sectors of the S&P 500. And what happened in the last 6 months? The rate of change. Well, look what happens here, what happens here, what happens here. These are the strongest sectors. And guess what are the strongest sectors outperforming the S&P 500? They are energy, they are technology, and there are consumer discretionary. And here are the industrials as well. These are the industrials. So the strongest sectors since basically the last several months has been the cyclicals. That's exactly what you expect when there is the bottom of a business cycle, and the business cycle starts all over again. Clearly, the money is coming from somewhere. Maybe the next chart, it tells you where it's coming from. The money is coming from the government. The government is spending, as approved, $4.5 trillion plus another trillion for inflation control. So there is a ton of money that is now flowing into the economy. If you look at any place where they can build roads and bridges, I mean, they're all working like crazy. So the government, as one side, the the Federal Reserve is tightening, and the other side, the government is spending a ton of money. Why? Well, this is the presidential cycle, the incumbent presidential cycle. This chart is courtesy of Oppenheimer and was sent to me by a great analyst, Ari Wald, that you probably saw many times on CNBC. But anyway, what is saying, this is the current market, and this is what it happens before the election. Look at the 2 years prior to the election where the market is going. Because whoever is in power, it doesn't matter which party you favor, they want to be reelected. And the bottom line is, and this is where the money is flowing through the economy, because the economy has to be strong in 2024. No president wants to go at the election with a recession, with an Armageddon kind of world and depressions and deflation. So things are working their way out. And all this, what this means, all this liquidity is what is propelling the stock market, that we like it or not. So now we can think linear thinking on the upside. Of course, now the next challenge for you and for me is to find out when this thing is going to turn down again. And this is my job. As you know, I published the Peter Dack Portfolio Strategy and Management. This book was commissioned by McGraw-Hill Education. It has some really nice reviews. Quite frankly, I was very pleased. I wrote 2 more books, and of course, all my articles, and you can find them on our website. You can follow me also on Twitter. I'm very active there. I update quite often my charts and my data and my thoughts. Of course, you can go to YouTube where I have all my videos, and I also sometimes I show my articles in LinkedIn. Anyway, thank you very, very much for reviewing this video. I hope I gave you some ideas, and I'm looking forward to seeing you at the next turning point. So long.